So I get a lot of questions from clients exactly how to position themselves when it comes to trade currencies. And one of the things I want to explain today, it's exactly that it's not that easy when you come to go from no experience just to start trading and out of the blue suddenly you expect to be profitable. That doesn't work that way. Now, the idea that I got for you guys today, and this is what we share in the war room, in the FX division, and everything that I discussed with Mahesh, is look for trades that they may imply a negative 100 to 200 pips, because you are at the end of their push lower, push higher, depends where you're looking at, and then we can position ourselves for maximum gain. So what I'm looking at today, the idea today is going long the euro versus the Great British pound. A lot to be said here at this moment, but the most important is, think about this for a second. The pound itself, they have a Brexit scenario, whether you like it or not, the European Union, they still have those members, and they can find a way all together with the European Central Bank to help each other. So they have that. On the other hand, the Great British pound, the United Kingdom, they're sort of isolated. Not the best time right now due to the corona pandemic to be alone on your own. You still have to close those trade deals, but apparently there's no business activity, so that's very challenging. British banks are now saying that no one won't be paying their dividends, so that's something that you want to think about. Now, what I'm looking is, although I look at Hawkeye Trader, we have a bearish momentum and we have all the signals, I'm going to allocate my position into the expected reversal of the euro against the Great British pound. So what we want to look now is, I have Fedman confirming that there's a move coming up. I still have bearish signals, so I understand that I do have risk against me. But because I'm taking this with a 100 to 200 pip bearish bias, I can start my long position. This is actually very good for any one of you guys that you have $10,000, $20,000. You can allocate your risk. No need for you stop loss. We're going to play with just having that level in our minds, or you can write it down. But the way it looks, we have here all the data coming from the real account for the purposes of teaching and sharing. Of course, we're going to use a simulation account, and it goes the same for everyone everywhere. Okay, so I want you guys to take a look at this. Now, I already know this, and I need to know exactly where am I heading, why I'm taking this long. That's always the question. You have to question yourself. Write down, get a notebook, and start writing down your ideas before you place your trades, before you commit to any activity. So why am I long euro GBP? This is currency cross. That's the question right now. Well, is because if I look at the monthly and I look at this, we have one push. This is the big push all the way from trend Fibonacci. The trend is favoring the euro. You can see this. Look at this. And we got a double bottom, or 1, 2, 3, 4, 4 touches of the 38.2% Fibonacci 8370. So the institutionals are telling you and me, everyone, they don't want a currency cross euro versus Great British pound below this level. This is something that we have to consider. Now, there are a couple of ways. I probably won't take all that because it's 440 pips to the downside. So I'm going to start taking levels to consider. Pretty much this will be my first level, 23.6%, 87.13. But what I will do now is considering this demand. There's demand this level. 86.42 all the way to 85.99, 86 level. Just gonna keep zooming, and you can see the demand. This is a demand level. Very important. You have the demand, and it will close a cycle if it comes all the way down here, down to that specific range. So I'm gonna take this and probably just use it this way, and that's my demand. There's demand. I wouldn't be surprised, you should not be surprised if we see prices coming all the way down here. Again, we're starting this with a bearish bias, and the bearish bias I'm using is about 200 pips to the downside. If you never heard of this, it's fine. Everyone wants to just set yourself to success. That's something that we understand. But what if you were to think that there's the risk implied in the trade? No, I'm not talking about 30 pips right away. No, to go for 100 pips profit. No, I'm talking understanding your risk all the way down to the demand zone. This is the demand. Okay? Once you got that, I accept my risk on my position, and I'm looking at least for 3 times my money. So if I'm looking all the way to 86.00, I'm looking for 3 times my money. I'm talking all the way back to at least the 92 level for the currency cross, Euro versus Great British Pound. Now, a couple ideas I'm going to share with you so you learn step by step. I know there's a difficult time. I have a friend that used to work with me in Dubrovnik, and his grandfather died. I know what is happening right now. I truly understand everyone. But we have to keep going, and for those falling, we must keep going and improve our lives. And the Ballot Arena is not going to an office anymore. It's WFH. WFH. Work from home. And trading and investing is one of those activities that are going to boom more than ever. Just so you give an idea, in Japan, in the month of March, they were looking to open 500,000 new trading accounts. This is per the Asian Nikkei Review, which is a website. I got a subscription. I'm just sharing with you what I read with them. It's amazing. And those dormant accounts, they're coming back because they are finding bargains out there, finding stocks that may actually keep going lower a little bit more, but the bottom is not too far from where we are. And no one will be able to time. But that's only an idea in stock. Also, the same is happening for trading currencies, wild swings that you can profit. And all the time, just mind the risk. And that's what we're doing. First, I'm discussing mind your risk so you can make the money. Now, if you were to have $20,000 and you have the opportunity to have a 200 to 1, 500 to 1 risk leverage, what we can do is take a look at this. I'm just going to close the pencil and now just go back and show you. We are going to place a trade. How do we do that? Okay, so that's my risk capital. You decide that you want to take a position that requires little maintenance. Okay, you want to share time with your family, and you want to play the game, but you don't want to be slave of the screen. So you want a position that requires little maintenance. That will be going long Euro versus the Great British Pound. Now, also, you have capital, but you don't want to over leverage yourself. So you have a big account. You're going to take a lot. We're going to take 5 lots initially, and a tracker. What is a tracker? A tracker is something that I came up a year ago, 2 years ago, when I have some anxiety to be in the market. It's just pretty much a 0.01 lot to see, okay, if I wanted to go long, if I wanted to buy now, was that the best decision? How good was my timing? But with the 0.01, it gives me time to improve my entry. So probably you can get it cheaper if you're buying, or you can get it higher if you're looking to sell. That's the idea. But still, we're going to go in with 5 standard lots, and we're going to look into what exactly. And remember, this is will be hypothetically your risk capital. And it's trading at 88.30. We already know that we're looking for 200 pips. And I'm going to place the trade. That will be 5 lots. What you will do, the low, always put, so far the low at this moment is 0.8824. I'm in the position, and one thing that I do define is the risk reward. So we're looking at 200 pips, risk a little bit more, 400, and a 3-to-1 will take us all the way. You should probably see 3-to-1 will take us all the way to this area, 94 cents, all the way up. Just gonna share how it looks. There's a 3-to-1 trade. Just leave it there. A 3-to-1 trade. We have 200 pips to the downside estimated, probably a little bit more. And also I'm gonna throw a tracker. The tracker. See if we can actually get it cheaper. What if we, and that will be the tracker. What if, when, and I'm adding that and just having there. So those are the two positions. First, the trade and the estimated profit 3-to-1 on my risk. Let me see if we get it. It will be $34,000 estimated. If you were to have that $20,000 risk capital, leverage all in place, and you can trade currencies, and you don't want a position that requires a lot of attention. You're starting with a bearish bias, understanding that the position will go against you. We have some fundamental thinking. It's not the best time for the United Kingdom. The pound may suffer, and the winner at the one that will come ahead will still be the euro. Also, the Fat Man, as I shared, one of the things I like the most, my number one tool to go is the Hawkeye Fat Man strength, currency strength. And although we have some bearish momentum in other tools like Roadkill, Volume, and Heatmap, what I do see is the opportunity to take a position in advance in the recovery of the euro. A lot of negativity has been priced in, a lot of things already on the table. What else can happen? They already know, we already know. That means that a lot of the bad news, they being priced into the euro at this level. So whatever positive news, as for example, Germany doing very well right now so far with containing the virus in Germany, well, that's something positive and may help Germany to guide the rest of the members of the European Union. Not so much the case for the United Kingdom and what is taking place in London right now. So that's what I have for you guys. Always think, always remember, why I'm long this, why I want to do this, what I'm looking at. Look for, when you're trading currencies, at least my advice, my guidance is look for the one that is the weakest. If I have to be honest, and you have to put on the balance, euro versus Great British pound, who has the least opportunity to recover the fastest? Well, of course, in this case will be the Great British pound. United Kingdom, they are in a position after Brexit that is not very convenient, especially with the economic landscape that is out there. So mind your risk. Always remember, look for this position, little maintenance, and set yourself to success. Okay, thank you guys. Talk to you later.